Guys, what's good? Still waiting for my mobile thing to go up. Alright, I see I'm live over there on Twitch. Alright, guys. Oh, I got my two faces over here on either side. What's good, everyone? How are we doing so far tonight? Hopefully you guys are doing fantastic. We are here going to do the final step here for Sirius XM. Our last modeling phase. Before I go and get into the nitty-gritty of all this stuff, let me go and say this. Guys, thank you so much for following on the stream, following on the YouTube page. I just added on the part 2 of the Sirius XM Liberty Media modeling on the YouTube page today. I know part 1 got a ton of following, and it was just amazing to see all the love and all the viewership from that. So guys, thank you so much for doing that. And I would also like to remind you guys, I try to stream every Monday, Wednesday, Friday, and Saturday. Monday and Wednesdays being financial analysis, Fridays and Saturdays being zombies streams, where I go and answer all your tough finance questions, all your money questions, all your stock questions. If you guys want to go and talk to me about one of those, you know, kind of hot takes that you have on stocks, on investing, you know, let me know, because that's what I'm there to go and do. I had to go and say that because, you know, gotta go and say that. This is a fun one because we're finally finishing our Sirius XM model. We'll be moving on to Liberty Sirius XM here next week. And I want to go and address also, I know, guys, I haven't been posting on Mondays all that much. I've been going live. These past couple of Mondays have been tough for me. A lot of interviews on my part, and a lot of other stuff that I've had to go and sacrifice to not do the streams. You know, things on my part where they come before the stream. So you know, I hope you guys can go and, you know, don't view me for that to be selfish, but I'm still streaming, you know, trying to do at least one day a week where we do this financial analysis. And like I said, I posted the last session on YouTube. It took me a little bit while, but for the YouTube content to upload from Twitch, it takes forever, guys. You don't even understand. It takes about, I don't know what, today it took about 3 hours to render and to upload everything to YouTube. So yeah, but let's get into finishing up the model. So what we're going to do today is, I already did the charts and the chart data today earlier, guys. So all we're going to be doing is our discount multiple analysis, our WACC DCF, and our IRR DCF to go and get our final prices, and we'll go and review those based on our scenarios as well, because like I did the first video, I made a scenario analysis here where we can go and change out what's going on here just to go and see, based on our projections of revenue, of subs, of everything like that, that we can go and change all that to go and see kind of where we are at. And also I will go and fill this in based on Atom Finance, of course. Love using their service. I feel like they have the best free service out there. So if you guys don't subscribe or don't have an account, dude, guys, go grab an account. It's easy, it's fun, it's one of the best services around. Alright, but getting into it. What I did earlier, like I said, was I did all the chart data so we can go and grab our charts. Right? Alt H VG, of course, to not, whoa, Alt W VG. There you go, no grid lines. Did grid lines earlier today to just to center everything. So we got all of our charts done. They look fantastic, super easy to do. So we're gonna go on to our WACC, which I did earlier, to be honest. Did it in a similar way that I did with Altice, where I did the market cap based on the debt and the market cap, debt, to go and grab the equity value, and then Oh, there were lyrics in that in that song, dude. I got scared there for a second. To go and get our equity share versus our debt share, went back to the 10K to go and grab the average weighted coupon there at 6%. Tax rate was, of course, gone from our last year of financial statements. To go and grab our get our after-tax cost of debt. For debt structure, to go and grab us our WACC, right? The only problem with the WACC DCF is I went and on our last stream, what I went and said was I'll go and think about whether I want to go and do debt pay down or buyback of shares. I went for buyback of shares. So I bought back 2% a year in terms of their float. So in aggregate, it's about about 24% of the float. So I could go and do a GGM, a Gordon Growth Model, based on the new capital structure, but I feel like that would be kind of a bother to go and do. But what I can go and do is on the WACC DCF here. I can go and do it new to shares outstanding, which I did for LTs. So I think I'm going to go and add that in right now, guys. It's not that bad to go and do. What I'm doing right now is I'm just opening up the past spreadsheet. Can I move that off to the side? Can I copy most of the formulas? And place. So, of course, gonna delete that. So all that it does, right, is instead of using our current shout, which would be whatever Sirius XM is trading at right now, their shares outstanding, what it's gonna use is our terminal year shares outstanding. So that goes for us in terms of Sirius XM means that we're using the end of the year, our terminal year, right? What you would use for a DCF, but for shares outstanding, because we did shrink the float by about 24% or 25%. So we need to reflect that in some type of valuation metric. So if it were me, and I'm going to do this as if it were me, I would still stick to our current plan of sticking with the current year, or at least 2019's shares outstanding, just because they could buy back that amount of stock, they could not. So it's good to have both of them on the page, but for our final analysis, I would rather have the more conservative approach, if that makes any type of sense. And by the way, guys, this is just a simple DCF of, net present valuing all of our future cash flows. That should be, let me go just double check this. J201, okay. Ooh. And that's why we check all the time, because that does not match what is actually on the DCF. So there we go. We went from $8 a share to $10 a share. So could be a little bit too much. The WACC to me feels decent. But this is our first valuation metric, of course. We're going to do a couple more. We're going to do, of course, our IRR DCF, our free cash flow, and then we're also going to do discount multiples to go and double check ourselves. I'm going to save the discount multiples to last, simply because we need to go and find out what our comps are going to be. I already want to go and say it's going to be Spotify, probably Warner Music Group, which just IPO'd about a month ago, but I still feel like they're a decent comp because it's a music streaming service with a lot of licensing and all that stuff like that. So decent comp. Apple could be, I may add it in just because I know services is not that much, and once you break it down, Apple Music is not a terrible amount either, but it still serves as a half decent comp versus some other plays out there, right? By the way, guys, if you have any questions, please let me know in the chat. Nostrovia, by the way. So IRDCF, right? Our current price, which we should go and update. Just closing some windows out. That's probably why I was bugging earlier. Yep. Oh no. Adam. And by the way, guys, after this series, I want to go and say this may take another week to a week and a half, maybe 2 weeks. Please let me know what stock you guys want me to go and do. I do have donations set up so that you can go and say what stock you want to go, what you want me to go and do. But if you guys have any suggestions, please leave them in the chat. Because I could go and do a crowd favorite, which was C Technologies. I could go and do Alteryx. I could do Lyft. I could do Uber. I've already done Spotify on the stream, so I don't want to go and do that just yet because I will be updating them on when they do earnings. If there is a stock that you guys want me to go and do, let me know via donations. Let me know via chat. Because I will go and do those versus something that like I have on my internal list of, you know, just names I want to go and do a model for. Because so far what I've been doing is names that are on my list that I wanted to go and do a model for. Like Match was a great one to go and do, especially since the IAC spinoff came into play. Loved doing Sirius XM because it's been a name that I've always known. So wanted to go and do that in this fashion. It's been a fun ride and it's really tested me. So that's been fun. But guys, let me know in the chat what you want me to go and do. And maybe we can go and have that happen. Like I said, you can always donate. No pressure to donate, of course. But if you do donate, I will go and do that before anything else I go and do. Okay, so we got all that done. Current debt. Let's go to our page. There we go. There's our current debt. Cash. I'm just gonna go and do that myself instead of relying on what the current thing is. And guys, again, if the music is too loud, if I'm too loud, if you guys need to see more based on me zooming in, please let me know in the chat. It helps me out so much. Tax rate's about fair. Terminal growth value, I always leave at 3%. Okay, there's no, that's why. By the way, for some of our assumptions, our base rate is always 10%. Credit risk premium, if they had a better credit standing, I would go and lower this. Growth stability, I would go and lower or raise this. I could almost add a point there. I'd add, you know what? I'll add. Oh, no. I'll add half a basis point there just because of Spotify's dominance in the market. So, EBIT, we're going to go to our, of course, our yearly financial statements. Grab EBIT, drag it along. All that will calculate our tax based on that tax. And of course, if you guys paid attention or if you guys haven't seen the last videos, 24% is about rounded up. I mean, we're assuming about a 24% tax rate. So CapEx and acquisitions, we're gonna just refresh that just in case, because I always import this from previous models. So if it's not correct, I always fix it just in case, you know, because for some models, you like for this one, of course, we opened up our working capital to include a lot of other stuff that we didn't previously. So that's whoa. That plus. And I will go and admit this. Last stream, when I was doing this, I went and said, hey, for their acquisition standpoint, I went and said, hey, I don't think they're going to go and do any more acquisitions. And they ended up buying Stitcher for about, what was it, $300 million. So I will go and do a stream like I do for all my other streams, and update you guys on the stock based on their next earnings report, because there's no point in me updating it now with the Stitcher acquisition, just because I have no idea how much shares that they went and diluted it by. I have no idea how much debt they took out to go and do it. It's speculation at this point in terms of financials. All that we know is, of course, the raw number. So I will leave it up to the financial statements to always tell me what's going on. Just like I haven't updated this or my Formula One models based on the debt exchange that happened between those two companies, because it hasn't been publicly disclosed in terms of financial statements. It has been publicly disclosed, of course, via news outlets and from some of their slideshows, so you could go and model out yourself. But I don't like putting raw numbers into my models unless they're on an SEC statement or done by the company. Especially when it comes to Liberty Media, because an instance for this, they took about $1 billion stake in the company from Formula One and put it to Sirius XM. So there's a lot of stuff that I will have to go and add on, and it's better to go and use their additions versus my additions, because theirs are at least audited. So all right, there we go, guys. Although this is giving me some concern. Oh, because I have the front page and they're from Spotify. So I ripped this model from Spotify's model because it was going to be a lot easier to go and use Spotify versus another company, simply because they're both streaming companies and pseudo-European. Surprised how well that fit out, even with a 10.5%. Competitive risk, you know what, I'm going to raise it by half a bip too. Alright. So price to free cash flow. Let's go and do current price we got from there. We just updated that. So price to free cash flow. We're going to need to redo this, by the way. So that's going to equal this year's free cash flow divided by shares outstanding. And as much as I hate to do this, I gotta do it. Years 10, we could go and make this 5 if you guys want to. Ooh, let's go and find out, because this will also help our discount rate too, our discount rates as well. Do their comps and just figure out also what free cash flow per share it is. Guys, how are you doing out there in the chat? Let me know. I always love hearing from you guys. And if you guys are watching this on YouTube, I'm so sorry, but, you know, Twitch comes first, of course, guys. Also, I don't agree with any of these peer analysis. I don't agree with any of them. Spotify is easily a competitor, so is iHeart. And I'll go and include Apple too. Easily. Oh, that's right. We can't do free cash flow per share. I'm going to easily cut this in half. I'm going to go 10 times. If you guys have any contradictory statements in the chat or in the comments, leave them below, because I will gladly field those. Okay, yeah. Oh, sorry, because I discounted so much. Let's make this 5 years, by the way. Just to make it a little bit more fair. Oh. And gotta not do the 5 year. There we go. That's tough. 4.75. That's tough. But we're still getting 25% upside right now. Let's go and do our discount multiples and see what those guys are for our as our double check, right? Because that's why we do these other valuation methods, right? Because I can respect at least my DCFs, of course, but I need a thought check, right? A sanity check, if you would. And by the way, this is going to be tough too, because we also go and dilute. My apologies there. We also dilute our shares outstanding by, like I said, 25% over the 10 years, but it's about 2% a year. So this helps out a little bit in terms of valuation, but not in terms of, call the doctor. It's, insane. If you guys would like for me to go and do a GGM instead of the methodologies I'm using right now, let me know in the comments, let me know in the chat, and I will go and do that, and I will go and upload a video to go and help you guys out and to go improve that valuation method. There we go. Also super helpful that I didn't do this methodology yet. So they don't do free cash flow to share. We can leave it at 15 if you guys want. I could lower that down a lot less, but this kind of gives you current price actually. Pretty much sell it right now. If we go and do, I'll just do 20 times 15 and 10. And then sales, so EV to sales. EV to rev about mean at about 4.4 times. So 4.4. Let's set 4 and do 3.5. Does that seem fair to you guys? Oh, and TME. Let's go and do TME as well. That bumps up EV to sales to 4.8. So instead of 4.0, let's do 4.5 and maybe 4.0. Does that seem fair to you guys in the chat? If it doesn't, please let me know. And guys in the chat, in the comments, please let me know as well. EBITDA to share. EV, EBITDA. We're getting to the point of, if you can go and see over here, it's getting tough to value. Spot doesn't have one. Sirius XM is 3.8 times, 9 times for iHeart, Apple at 21.3. I'd say 20 times is half decent, but I will be extreme when it comes to the cuts, so I will go and do 15 and 10. Because I'm only going to say that's fair, right? Sales per share. If you guys think otherwise too, let me know in the comments. Let me know in the chat, because I will gladly change it based on your thoughts and opinions. Sales divided by share price. And for those of you new to the channel, new to what we're doing here, this is always the shortest video that I go and do, just because it's kind of the prequel to the new model, and it's just us finishing up some valuation stuff. So I like to leave a lot of time for questions if there are any questions, and to you know, do all that type of stuff. EBITDA per share is 2021, right? Yep. But, oh, 2021. There we go. Whoa. No. Tough little EV, but I'll share it right there. That's brutal, actually. Oof. That's 22. It changes per model, by the way, guys. So if I seem a little flustered, it's just that way. Hopefully you guys are enjoying these videos. If you guys aren't, let me know. Give me some positive feedback. Anything to go and help the viewer experience, I'm all for it. All right, dope. So on average, we're seeing our sell price at about $871. Front page says average of a little bit less than that, actually, $728, which is 25% above where it currently is trading at. Interesting. That's also our base case. So let's go and see our best case, which goes and says it's about 14% more upside than our base case. Our worst case, whoa, says it's about 9% higher. So to be honest, not too bad here. Maybe our projections are too optimistic, but when you go and see our sell price versus our buy price here for the worst case scenario, it's way below what the current price is. So it's pretty much going and pricing in 9% from what the current price is, not what our buy limit is, which is of course 20% lower than our sell price. So At base case, it's a half decent buy. At the worst case, it's pretty much in line with the market. What will be fascinating is when we go and do Liberty Sirius XM to go and see if the spread that you get from there is worth it. Because right now, not so much, but I will go and fill in our EPS versus the comps, of course. For 2020, I'll always do diluted. So what do you guys think about what we derived for this name? Too optimistic, too pessimistic? Let me know in the comments. Let me know in the chat. And, you know, we can go and fix some of that later on if you guys really want to. So for EPS, we're looking at for consensus on Atom Finance, right? It's 23 cents a share. 2021 is 24 cents a share. So we're a little bit higher on our 2020 EPS and a lot higher on our 2021. But with their acquisition of Stitcher, I don't know how much will get revised in that meantime. So it's very interesting to go and think about that. Well, this may be a super short stream, only 30 minutes. Wow. Guys, I'm thinking about calling it here just because I did all of our multiple analysis. I did all of our different valuations. What's fantastic is on diluted share basis. Okay, so I should go and fix this, right? Because I did that in 10 years instead of 5 years. So 2025. Even still, it's about $2 higher than what it was on without including the share buybacks. So I don't know, guys. It seems like it's a little bit undervalued. Although, like I said, guys, if you guys think that it's if we did too much in our share buybacks, if we did too much in our growth estimates, let me know in the comments. Let me know in the chat, and we can go and fix those, especially when we start working on Liberty Sirius XM, because I feel like I know that normally it trades at about 30% discount to Sirius XM, so it could get a little bit interesting. But let me know if you guys think that our assumptions are whack or not. But I feel like we got a lot accomplished today. I'm still entering in some financials for yo Johnny, dude, whack. I got the page up for you, my dude. Whack, I see what you did there, dude. I thank you for the joke, dude. That's dope. It's fantastic, actually. I actually don't know if you follow me or not, dude. Hopefully you send me a follow, dude. Thanks for joining the stream. But I don't know. I kind of want to end the stream here because we've just done everything that we can. We did all the charts. We did all the valuation metrics. I want to go and say we have about 3 hours just live stream in sunk into this name. which seems about right for forecasting everything out, because it takes me about 8 to 10 hours, depending on the name, to enter in all the financials and all that stuff like that. So I feel like we're about right on track. That way next Monday we can dive right into Liberty Sirius XM, which should be interesting because I now know, after reading some sell side notes, how to better evaluate the name and how to better evaluate the holdings and all that stuff like that. It helped me out a lot today. So yeah, I feel like let me go and save this to be ending. So yeah, guys, sorry it's gonna be a short stream today, but thank you so much for watching. If you guys haven't seen the previous parts for this series, they are of course in my Twitch stream for past broadcast under modeling. If you haven't seen them and they're too late for you guys on Twitch, on the YouTube page, which is also in the About section on the Twitch page, same name, Will Hustle WS on YouTube. You can go and find the first 1 and 2 sessions here for modeling this name, and the third one will be up hopefully by Friday, just because it takes so long to go and upload on YouTube. And I do stream every Monday and Wednesday doing finance modeling, like you're seeing today. Fridays and Saturdays are of course doing Nazi zombies on Black Ops, and doing investment Q&A. So any type of hot takes, any type of stock questions you have, any type of finance questions you have, any type of money questions you have, send them there, and hopefully I see you guys in that stream, because it's super fun. Loved having you guys on this one too. Hopefully you guys like the vibe, and thank you so much for watching, and thank you so much for your continued support.